Welcome to this training video on inter-entity transactions. My name's Anne from Orchid Systems, and today I'm going to run through the setup needed to automate loan account entries between entities. Inter-entity transactions allows you to automate loan account entries between entities. It works within one Sage 300 company database or across multiple Sage 300 company databases. The due to and due from transactions are automatically generated when the GL batches are posted. It works on all general ledger transactions, regardless of their origin, so therefore works across all the subledgers. And it balances the entity transactions at a GL segment level. And this is what I'll be covering in this training video. Inter-entity transactions also allows you to auto-create AP, AR, and/or GL reallocations. It automatically allows you to create these additional transactions to automate complex inter-entity transactions. And inter-entity transactions provides for cash management between companies. It allows you to allocate payments or receipts for invoices in one company using a bank account in another company. You can transfer invoices from one company to another company for consolidated processing. And you can process bank transfers between companies. There's also an AR and AP consolidated age trial balance. The triggers and the cash management is covered in a separate training video. Inter-entity transactions comes in two editions. Single company, which creates the balancing entries between entities in the same Sage 300 company. And you have multi-company, which creates balancing entries between entities both in the same company and across multiple Sage 300 companies. Entities are defined by a segment in the GL account. In order to run through the setup and configuration needed for inter-entity transactions, the first example I'm going to do is using the single company edition. We're going to record an AP invoice and allocate 50% of the invoice to two entities within the same Sage 300 company. The second example I'm going to run through is a multi-company example, when you're selecting the entity by choosing a GL account belonging to the entity. We're going to enter an AP invoice allocating 50% to Entity 1, 30% to Entity 2, and 20% to Entity 3. And the final example that I'm going to run through is also for inter-entity multi-company, when you're selecting the entity by choosing an optional field. We're going to enter an AP invoice and allocate 22% to Entity 1, 33% to Entity 2, and the remainder to Entity 3. The next example we're going to do is the setup required for inter-entity multi-company, where we're going to allocate expenses to separate companies, and we're going to choose which companies to allocate to by choosing their respective accounts. So we're going to enter an AP invoice in Orc Limited. 50% is going to remain in Orc Limited, which is Entity 1. 30% will be allocated to Entity 2, which is Orc Inc. 2, and 20% to be allocated to Entity 3, which is Orc Inc. 3. The original AP invoice entry will debit expense belonging to Entity 2 of $600, debit expense belonging to Entity 1 of $1,000, debit expense belonging to Entity 3 of $400, and credit the control account of $2,000. When this is posted in GL, inter-entity will first of all automatically raise the loan account entries within Orc Limited to balance the entities. So it will raise due to 1 in 2's books of $600 to balance Entity 2, due from 2 in 1's books of $600 to balance Entity 1, due to 1 in 3's books of $400 to balance Entity 3, and due from 3 of $400 in 1's books to balance Entity 1. And then recognizing Entity 2 and Entity 3 are external company databases, the transactions will be reversed, looking at entity 2 first. It will reverse the 2 entries in Orc Limited for entity 2 and debit the expense in entity 2 and credit the loan account in entity 2 due to 1. And then for entity 3, it will reverse the expense out of entity 1, reverse the due to 1 in 3's books out of entity 1, and debit the expense in entity 3 and credit the loan account to entity 1. In order to do these transactions, we're going to look at, after installing and activating the module, the options available to you for the multi-user license, and to use the visual process flows for the setup of inter-entity transactions. Then we're going to configure. First, we need to configure in the GL to create the segments and accounts and source codes that are needed. In inter-entity setup, we need to set the segment that we're going to use for the entity segment, and then define our options on the processing tab. Then we need to create our IET routes between the different entity pairs, and also define the entity database mappings, so which entities relate to which target databases. And then we're going to go ahead and process the transaction. We'll enter an AP invoice and post an AP, and then post in GL to see the resulting transactions. And in terms of checking errors, we have both error batches within the GL, but we also might have errors which we'll find in the inquiries if transactions cannot be created in target databases. And we'll see how to use the periodic processing to get those transactions to go through. Inter-entity transactions, single company, multi-company, and inter-entity trade is all in the same install shield. It is the activation code which makes more of the options available. Inter-entity transactions must be installed and activated in all the companies that are to be the source of inter-entity transactions. So where the source transaction is going to be entered, for example, in Orc Limited, we're going to enter the AP invoice entry and we're going to send transactions to Orking 2 and Orking 3. If Orking 2 and Orking 3 are not going to be the source of transactions, then we don't need to activate inter-entity transactions in those databases. After activating the module, we recommend that you assign the visual process flows, as we have process flows which assist with the setup, and we're going to use the inter-entity loan account entry process flow in this training guide. Before we go and do any setup, let's just look at the license file, and we see that we have a multi-company and cash management license. So this is inter-entity multi-company, which includes cash management. And with this license, we see the following in the setup: options, linked accounts, transaction routes, entity database mappings, GL triggers, and we also have the cash management options of cash management bank setup, cash management AP and AR setup, and receipt selection codes. Using our RY Transactions loan account entries visual process flow, we can see the top half of this visual process flow is covering the setup of inter-entity transactions, and the bottom half is covering the processing with inter-entity transactions. Initially, we're going to run through the setup. For inter-entity transactions, the first thing you need to do is define a segment in the General Ledger chart of accounts which is going to relate to entity. So it's around this segment that inter-entity transactions is going to raise loan account entries to keep the transactions in balance with respect to this segment, in our case, entity. We would recommend when using entity accounting that you use the entity segment in the GL closing. And you need to define your entity segment values. In our case, we have 5 entities. Entity 1 and 5 relate to Orc Limited, the company we're currently in. Entity 2, 3, and 4 relate to Orchid 2, 3, and 4 respectively, and they're all closing to their own retained earnings account. After creating the segment codes, you need to go ahead and create the GL accounts needed. You need the loan accounts between the different entities, and you need the different revenue and expense accounts to allocate balances to target companies. And in this example, we're going to post office supplies to entity 1, 2, and 3. And the final setup we need to do in GL are the source codes needed. We need an IY source code for each of the subledgers, which are the source of inter-entity transactions, and we need a reversals source code for each of the subledgers which are involved in inter-entity transactions. After configuring the GL, you need to consider who has access to the inter-entity transactions setup and who has inquiry only to the inter-entity transactions setup. And then in setting up inter-entity transactions, when we're using a GL account number to choose the target database, it's these three options that we need to set up. In the inter-entity options, on the Segments tab, we need to select our entity. In our case, it's segment 4, and we've selected that as our entity segment. And you need to define the default entity segment value. The default entity segment value is only used in complex journals when there are multiple debits and multiple credits to multiple entities. Inter-entity would not be able to work out which loan accounts to use for the debit to entity 6 of $250 or entity 5 of $300. What portion relates to entity 7 and entity 8? In this instance, all loan account entries will be calculated with respect to entity 1, the default entity. And then on the Processing tab, we need to turn on inter-entity transactions. When you're using multi-database, you need to select Allow Inter-Database Processing, and this will allow transactions to go to other databases. When creating transactions in target databases, you can optionally create GL accounts when posting. Inter-entity will then decide if a new expense account or revenue account needs to be created in the target database. Perform auto reversal is typically turned on when you're doing multi-company processing. So in Entity 1, Orc Limited, for example, any transactions raised for Entity 2 will be reversed from Entity 1 and then pass through to Entity 2. If you have a different financial year end, then you can use the transaction date to determine the fiscal year end period in the target database. If this is not selected, then both the transaction date, fiscal year, and fiscal period will be passed into the target database. You typically only select this when companies have different financial year ends. Use home currency or functional currency. If you want to use this feature, inter-entity transactions will send the source currency to the target database and the exchange rate from the source transaction, but it assumes that the target database has the same functional or home currency as the source database has. If this is not selected, inter-entity transactions always sends the source currency to the target database, and the date will be used to determine the exchange rate to be used in translating to functional currency in the target database. The options Consolidate and Process in Detail refer to the way in which the loan account amounts are calculated. If you consider this journal, where we have multiple debits to Entity 1 of $100 and $400, and multiple credits to Entity 2 of $50 each, whether or not we select Use Consolidated Entity Processing or Process in Detail affects the number of loan account entries that are made. Without Use Consolidated Entity Processing or Process in Detail selected, inter-entity transactions will sum the debits and credits by entity. So we will get a net debit to entity 1 of 500 and a net credit to entity 2 of 100. And then the loan account entries will be raised based on this journal. So for the loan account between 1 and 2, we'll get a credit of $200 and a debit of $100. And similarly, for the loan account between 2 and 1, we get a debit of $200 and a credit of $100. If we select Consolidate, use Consolidated Entity Processing, then Inter-Entity Transactions will sum the journal by entity, giving us a net credit to entity 1 of $400, debit to entity 2 of $100, and a debit to entity 3. And the loan accounts will be raised in this way. If we select Process in Detail, then Inter-Entity Transactions will do no consolidation at all, and it will raise loan account entries for each journal line. You would typically use Process in Detail if you want to preserve the original transaction journal descriptions, or if you have different currency exchange rates for multiple entities, debits and credits. You need to specify the source type to be used for the inter-entity loan account entries and the source type to be used for the reversal entries. And these two should not be the same value. And the final option, Delete Exported Journal on Error, relates to general ledger journals being created in target entities. If unable to create the general ledger batch, for example, accounts do not exist, do you want an empty batch to be left in the target company, or do you want Inter-Entity to delete the batch that it created? The Inter-Entity triggers processing options will be covered in another training video and are not needed for raising loan account entries both within and across multiple databases. The next setup that needs to be done is the inter-entity transaction routes. You need to define a route between all the valid trading pairs between the entities. So this route, for example, between entity 1 and entity 3, if a transaction debits or credits entity 1 and credits or debits entity 3, then this account will be used in the due from 3 in 1's books entry. This account will be used for the due to 3 in 1's books. And this account will be used in the due from 1 in 3's books. And this account will be used in the due to 1 in 3's books. You can either have two separate accounts for the asset and the liability, as we have here, if you want to show the asset and the liability separately on your trial balance. Alternatively, you can use the same account and use the balance or the sign of the account to know which way the loan account is at any point in time. You do not need to define a route between 1 and 3 and 3 and 1. You can either define it as 1 and 3 or 3 and 1, but you don't need two routes. So for example, here's our route between 1 and 3, and here's our route between 2 and 1, which is specified the other way. If required, you can have multi-level routes. For example, if we had a debit to entity 2 and a credit to entity 3, because there's no direct trading relationship between entity 2 and 3, the balance will first be routed between the loan accounts between entity 2 and entity 1, and then from entity 1 to entity 3. And you can have as many levels as you need in this transaction routes. And you need to define all the routes. In our case, 1 and 3, 1 and 5, 2 and 1, 2 and 3, 4 and 1, 4 and 2, 4 and 3. And after defining the transaction routes, you then need to define the entity database mappings for all external databases. So entity 2 relates to ORCINC 2, entity 3 relates to ORCINC 3, and entity 4 relates to ORCINC 4. Because we don't have entity 5 in this list, we know entity 5 belongs in ORC Limited. And when creating entries in the target database, this is the source code that we're going to use. It's recommended that you use a different source type other than GLJE, because then you can use the source code reporting to extract inter-entity transactions only. But this source type should not be the same as the source type that you're using for the loan account entries, the reversals, or the trigger entries. Inter-entity transactions always post to the target database in source currency. But if you do have the same home currency, you can transfer using home currency, select this to yes, and then not only will the source currency be transferred across, but the exchange rate and home currency will be transferred at the same time. If you're not using the same home currency, or you don't select using home currency here, then only the source currency is transferred across, and the Common Services currency tables will be used to calculate the exchange rate and the home currency in the target database. And you also need to specify a user ID and a password to be used to create the GL batch in the target databases, and this user must have the rights to create transactions in the target database. For general ledger transactions, you can select the database as not an online database, in which case it will create an export batch in this particular file path. The export batch is created when the IET periodic processing is run, selecting the pending entries. And you can optionally select to order post in the target database if you want. Completes the setup required for inter-entity transactions loan account entry automation. For this example, we've created an AP invoice, which we're going to allocate $1,000 to entity 1, $600 to entity 2, and $400 to entity 3. And we're selecting the entity by choosing an account that belongs to the entity. So -1 for entity 1, -2 for entity 2, and -3 for entity 3. When we go ahead and post this transaction, nothing happens at this stage, as inter-entity transactions works at the general ledger level. When we open this batch in the general ledger, we can see the credit to the control account and the debit to the expense account in entity 1, 2, and 3. When we post in the GL, inter-entity transactions will do three things. The first thing it'll do is raise the loan account entries between entity 1 and 2 and entity 1 and 3 in the source batch. The second thing it'll do is, based on our entity database mappings, is reverse out any transactions that belong to external target databases and raise those transactions in the target database. The first 4 lines was the original AP invoice entry. So the first thing inter-entity transactions has done using the source code IY is raise the loan account entry between entity 1 and 2 and between entity 1 and 3. So now entity 1 and 2 and 3 are all self-balancing with respect to entity. Then, because entity 2 exists in entity database mappings as a target database and perform auto reversal was selected, it reversed out the entries relating to entity 2 and the entries relating to entity 3, as it too is a target database. In the IET audit inquiry in the source company, if we filter by the batch number, we see the transactions that were created in the target databases. Batch 231 in entity 2 and batch 251 in entity 2. And the transaction status is exported. If there were any errors, we would see error here, and in the message we would see the relevant error message. We also see the user, date and time that the transaction was posted. And in Entity 2, we see the GL batch that was created from posting sequence 96, batch 288, journal entry number 1. It is the debit to the office supplies of $600 and credit to the loan account with Entity 1. And in Entity 3, we see the GL batch that was created from posting sequence 96, batch 288, entry 1. We see the debit to the office supplies and the credit to the loan account with Entity 1 of $400. And the GL batches in Entity 2 and Entity 3 would have been posted had we selected yes to auto-post the target entries in the entity database mappings in Entity 1. In addition to filtering by the fields in the top of the screen, you can click in any column or combination of columns and filter on the column value. There are two scenarios where inter-entity transactions will prevent the source batch from posting. The first is when the journal entry is out of balance with respect to entity. If we look at this particular journal, we see that 3 of the journal lines all involve entity accounts, but the first credit to the control account does not involve an entity account. Inter-entity transactions will not know how to reallocate this $4,000. When you post this sort of batch, you will get an error message and an error batch will be created. And the reason for the error batch will be found in the posting journal. The second type of error that will prevent the source journal from posting is when there's a missing route. In this instance, I do not have a route between Entity 1 and Entity 6. When we post the journal, we will get an error batch being created. And the reason for the error will be in the posting journal. The second type of error that can occur is when the source batch posts successfully, but it's unable to create an entry in the target entity. So if we go ahead and post this batch, we can see this particular batch posted correctly. It raised the loan account entries and reversed the transactions for target databases. In the IET audit inquiry for the appropriate batch, you will find the reason why that particular entry could not be posted. And in this case, the target database does not support USD, the source currency of the transaction that we were posting. The typical errors that you find here are missing accounts, locked fiscal year and periods, or currency issues as what we see here. Once you have corrected the error in the target database, you can go to the inter-entity transactions periodic processing and process the error entries. And the final setup you have in inter-entity setup is linked accounts, where you can define the linked pairs. So the account 1011-2 in Entity 2's book should match 2012-1 in Entities 1's books, and so on. If you've filled in the linked accounts, then you can run the account balance inquiry screen, and it will go across database and give you the balances in the specified currency. If everything is posted and there are no errors, then your linked accounts will be in balance. And you can use generate inter-entity transactions to generate the transactions prior to posting so you can validate. So in this example, if I have this batch ready to post, then in inter-entity transactions, I can say generate inter-entity entries and select that batch number. And you can see Inter-Entity Transactions has raised the IY entries for the due to and due from loan account entries between Entity 1 and Entity 2 and Entity 1 and Entity 3, and raised the reversals. But as this batch is not posted, there'll be no entry yet in the audit log, and there'll be no batches in the target entries. But when I go ahead and post this batch, now Inter-Entity will recognize that it doesn't need to do any work with respect to raising loan account entries or reversals, as this batch is self-balancing with respect to entity, but the entry will be made in the audit trail and the target batches will be created. So you can use Generate Inter-Entity Transactions to check the entries that will be added to the source batch prior to posting. We have just seen the automation of loan account entries in Inter-Entity Multi-Company using accounts to select the entity. In the GL setup, we saw we needed to create an entity segment and segment values, create the accounts for the expenses, revenue, due to and due from, and create the source types needed for inter-entity transactions. In inter-entity setup, we needed to configure the entity segment, turn on inter-entity and configure the source types, create routes between the entities, complete the entity database mappings, and for the account balance inquiry, fill in the linked accounts. And when posting GL batches, we needed to keep an eye on the GL posting journal errors and an eye on the inter-entity audit inquiry for errors recorded in there too. Thank you for watching this training video on inter-entity transactions, the automation of loan account entries. For more information on inter-entity transactions and other training videos, please go to www.orchid.systems.